It's a brand new week, everyone. Good morning. Welcome to a fresh week. And we have 55 minutes to do current and relevant business conversations right here on Business Morning. I'm Ini John Mekwa. Hope you had a restful weekend. Well, let's do business. We're starting from what we would normally do, which is from the oil space. We see that prices rose today. The conflict between the United States and Iran, that has heightened concerns over disruptions to energy shipment through the Strait of Hormuz, following another round of U.S. strikes and American military casualties. In fact, we hear there's been 8 rounds of strikes between the United States and Iran. And of course, that has brought us to where the international benchmark Brent crude for September delivery went up almost 3%, 2.85%. It's now at $90, $90.65 a barrel. That's where we're having Brent now. U.S. West Texas Intermediate crude for August, that has also gained 2.45%. Is at $84.51. So the uncertainty and the disruptions continue. The latest escalation comes from the U.S. military confirmed a 3rd American service member had been killed in recent operations, while investigators recovered unidentified remains near the site of an Iranian attack in Jordan that had previously left 2 U.S. personnel dead and another missing. American forces completed a 9th consecutive night of strikes against Iranian targets, and the strikes will continue, degrading Iranian military capabilities used to attack commercial vessels and civilian mariners transiting the Strait of Hormuz. This is what the U.S. Central Command said in a statement on X. So the world seems to be in a big trouble. Doesn't look like we're coming out of this anytime soon. Back here in Nigeria, Nigeria's petrol import, that has surged 207% to 543 million liters in June. This is according to data from the Nigerian Midstream and Downstream Petroleum Regulatory Authority, that's the NMDPRA. The sharp increase comes despite higher domestic refining capacity, with imports rising to supplement a local supply and meet national fuel demand. The latest figures highlight the continued reliance on imported petrol, even as local refineries, including Dangote Refinery and state-owned refineries, ramp up production. Industry analysts say that the increase reflects supply dynamics and distribution requirements across the country as authorities work to ensure fuel availability. Away from the oil and gas space now, see the market last week closed in the negative, down 0.14%. That's the oil share at 243,462.13. Market cap closed at 157.057 trillion naira. That was an increase compared to the previous week of 0.39%. Activity was mostly red, all of them red, in fact. Volume was down, closed at 2.81 billion. Value, 182.499 billion naira, and deals for the week, 226,729. The sectors have some green colors, we see. Sectors, for instance, banking was up 9.30%. Consumers was down, industrial goods down, insurance up also 0.25%, while oil and gas was down. So mostly banking had a lot of cherry picking last week, as at 9.3% up. Top gainers, First Holdco led that group. Thomas Watt and Fidelity Bank, they closed very positive, especially First Holdco that closed. Opened the week at 69 naira 20 kobo, but closed at 95 naira 95 kobo. That's a lot of gain on that. I'm sure some investors are waiting to take profit as we begin the new trading week, having gained up to 38% on each of their stocks. And their top losers had Boa Cement. Boa Cement was a major market driver last week, dragged the market into the red, and I think like twice or so during the trading session last week. Red Star Express, also International Energy, they lost. So Boa Cement was down 18%, almost 19%. Red Star 18.53, International Energy 15.27. Top trades had First Holdco, FCMB, and Access Holdings at the end of the week. Still around the markets now, the Securities and Exchange Commission says that it is targeting a near-zero trade fail rate in the second half of 2026 as it prepares to implement the T+1 settlement cycle in Nigeria's capital market. The Commission says that the shorter settlement period is expected to improve market efficiency, reduce counterparty risk, and enhance liquidity by ensuring securities transactions are completed within 1 business day after the initiation of the trade. SEC adds that it is working with market operators, exchanges, and clearing institutions to strengthen settlements, infrastructure, and ensure a seamless transition to the T+1 regime. The regulator says that the move aligns Nigeria's capital market with global best practices and is expected to boost investor confidence and market competitiveness. And away from the market now, we see that the Nigeria Revenue Service, they're stepping up efforts to modernize tax administration, setting a July 31 deadline for all large taxpayers to fully adopt the national e-invoicing and electronic fiscal system. Companies with annual turnover of 5 billion naira and above are required to complete onboarding, system integration, and begin transmitting invoices through the NRS platform. The tax authority says compliance monitoring is already underway and warns that businesses that fail to meet the deadline could face regulatory enforcement. The initiative is expected to improve tax compliance, enhance transparency, and strengthen revenue collection through a fully digital invoicing regime. And the federal government is planning to raise a 729 billion naira bond to settle part of the mounting debt owed to electricity generation companies, that's the GENCOs, in a move aimed at improving liquidity in Nigeria's power sector. The proposed bond is expected to cover a significant portion of outstanding obligations to power producers who have repeatedly warned that unpaid debts are threatening electricity generation and the sustainability of the industry. Government officials say the debt instrument is part of a broader effort to stabilize electricity value chain, restore investor confidence, and ensure GENCOs have the financial capacity to maintain and increase power supply. Now, over the weekend, precisely yesterday, President Bola Tinubu launched the 5 social protection and human development capital programs. It's worth about $3 billion, and it's aimed at reducing poverty and improving the lives of millions of Nigerians. It was represented by the Minister of Finance and Coordinating Minister of the Economy, Mr. Taiwo Oyedele. The President said that the initiatives are designed to ensure that the benefits of ongoing economic reforms reach every household, and stress that the success of his administration will ultimately be judged by their impact on the lives of ordinary Nigerians. We got this clip from the NTA.
Through expanded cash transfers, we have already reached 15 million vulnerable households, lifting an estimated 7.5 million people out of poverty. Today's program directly on that momentum. So what are we launching today? NG Cares additional financing, about US dollars 1.25 billion World Bank supported program that is focused particularly on smallholder farmers and small businesses. Solid. A US dollar 300 million World Bank finance initiative that bridges humanitarian relief and long-term development, investing in infrastructure, livelihoods, and services for displaced persons and the communities that host them. We rebuild not just homes, but hope. And hope, the 3-in-1 program, it's a US dollar 1.5 billion flagship investment in Nigeria's greatest assets, our people. Through Hope Gov, Hope PhD, and Hope Edu, we strengthen primary health care, improve foundational learning in our public schools, support our teachers, and build more transparent, more effective governance at the world level.
In reaction to that launch yesterday, the Center for the Promotion of Private Enterprises has commended that social intervention program supported by the World Bank. They call it timely and commendable policy initiative. According to the Chief Executive Officer of CPPE, Dr. Muda Yusuf, the program marks an important progression from macroeconomic stabilization to inclusive economic transformation. And the overriding priority, says, is rigorous implementation, transparent governance, effective targeting, and measurable outcomes. Only then will the gains from the macroeconomic reforms translate into tangible improvements in welfare, stronger productivity, and a broader sharing of economic prosperity. Well, I guess even still in line with that, last week we did hear of the launch of a $500 million farm fund. And the aim of it is to attract capital for diversification in the agriculture sector of Nigeria. And of course, we get a lot of not so positive reactions following this because of the many pronouncements and policies around food security, which a lot of people would say they have not seen the proceeds. But let's find out if this will be different, at least from the perspective of the founder of International Cocoa Diplomacy, Oba Dokun Thompson. Good morning, sir. Welcome to the program.
Thank you. Good morning.
Good to have you. So, are you excited about this $500 million farm fund? Does it sound different from what we've heard before?
Well, actually, I shouldn't say I am excited, but I'm hopeful that we can begin to plant the seed at the right time. We're at the right time. The reason why I'm saying we're at the right time is we're at the stage where climate smart agriculture is taking a strong root in the food systems when it comes to production across the world. It makes it easy for investors to be able to comfortably invest further because you have the opportunity to now even bring in the green financing whereby you can use that for de-risking purposes. So that encourages not just the investors, it also gives opportunities to the farmers to do more. But food systems or systems of providing food security, or even if it's for economic development in terms of export, is a very, very complex set of systems and processes that requires a lot more than $500 million. But as I said, I see it as a seed that will eventually grow.
So, but, I mean, even beyond the fund, the money itself, people ask questions around the intentions, the expertise, or the personnel managing these funds or initiatives. I guess even beyond the money, people say you don't throw money at problems or challenges, but really the intentionality of it would give more results than even the money.
When we're talking about intentionality of achieving a purpose, and when government is involved or leading it, there's a disconnect somewhere. And that's why people are a bit confused. There's the policy aspect, there's the research aspect, and there's the commercial aspect. So when you now put those 3 points together to create that triangle and try and bridge those gaps, then you begin to see a lot of what is expected. You now begin to see that there's a lot of movement as well. So this is where education, awareness, and stuff like that is required.
So So, when you hear this, what do you think, perhaps learning from the mistakes of the past, where we've had a lot of pronouncements? I know it's the same country we had emergency against food insecurity, and a lot of things haven't come out of that. What would you like to see that would make you more hopeful? I know you said you're hopeful.
Yes.
More hopeful that we would have some tangible results.
Okay. One of the areas that this particular initiative is supposed to cover is actually about the opportunity to now establish data, which is one area we don't have anything. And data sovereignty, just like food security, is about sovereignty issues. So this is going to be linked with data. Another area that I would know and be assured that there's going to be movement is where, when you're looking at implementation, there's supposed to be tracking, monitoring, because it's not just about planting a seed or something like that. You have to ensure that the seeds are producing what they're meant to do. It's not just about we've given out this, we've given out that, and then we turn our backs. How do we ensure we can achieve the purpose? We need to also train. There needs to be a lot of capacity building. And I believe one of the major goals for this initiative is about the youth inclusion or youth engagement. The older farmers are used to the traditional practices, and that's why I said at the beginning that we now have the opportunities to be able to even employ technology. And while you're using your technology or your phone to create apps or create, what do you call them now? All these comedy stuff. You can actually, content or whatever, yes. You can now, or the skits as they say, yes.
Okay.
You can now use your little telephones or mobile phones to now be able to even see income, to see growth of your environment or the way the dynamics are changing, and how you can even now begin to extract more value from your agriculture. I mean, it could be cash crops, it could be about food security, whatever it is. So they're going to be more engaged with a lot of technical aspects around the environment, and I see this as a very, very positive thing. And I'm hoping that the government or those who are implementing this $500 million farm fund will be able to look into those areas very, very closely.
I hope they will look at the post-harvest losses, storage, preservation. That's a major weak link in our agriculture.
There was news last week that we lose about 32 million tons of food, out of post-harvest loss, out of lack of storage facilities and stuff like that. And that's why I said $500 million is very little in the scheme of things, because look at logistics. Part of the problems has to do with logistics. We don't have, but it also creates opportunities. We don't have specialist logistics systems. And when we're talking
and they say this fund is supposed to attract private capital. So, I mean,
yes, that's why
when there's an incentive.
Exactly. That's why I said once it's a good seed, it may attract a lot more the minute that seed is planted properly. So the level of opportunities and the potentials that is available within the logistics industry is incredible. Apart from petrol or oil or gas, we don't really have specialist logistics systems. What I mean by that is, apart from the infrastructure to even be able to move goods and services seamlessly, you use the same truck that you use to carry cattle today. You use the same one to even carry boxes of Indomie in systems that are very careful about food security, food safety, human safety, health hazards and stuff like that, that becomes a challenge. It's a no-go area. But when we talk about no-go areas, every no-go area has potentials, has serious opportunities that can be harnessed.
And holds a lot of incentives.
Yes.
Yeah, I would just like for you to just comment on this. I mean, I think since last week, we hear about Nigeria and Ghana cooperating on cocoa value chain and value addition and all of that. It sounds good, but I mean, sometimes Nigeria and Ghana are very competitive, so I don't know how this will turn out.
That's the cocoa industry. That's my area. And, you know, a lot of people are excited about wanting to hear stuff like, oh, we're banning raw this, we're banning raw that. But at the same time, nobody's asking the full meaning of value addition. The event last week had to do mainly about a call to action. The federal government, the president, want us to add more value to our products. Not necessarily before export, but even for consumption purpose. Cocoa, for instance, when you say raw beans, I always ask the questions, do you know the difference between the wet beans and the actual raw beans that is exported? Because there's a lot of primary processing done before you can get it bagged for export purpose. And when you look at the Raw Material Research and Development Commission, when they talk about adding or processing raw materials up to about 25%, a lot of what is exported would have actually gone through up to 25% before export. Nigeria exported $1.9 billion worth of cocoa last year. Exported about, I think, just over $200 million of cocoa butter. In total, that's the cocoa area. We had an export value of, in terms of tonnage, of just about $400,000, which simply means that Nigeria produced just over 400,000 tons of cocoa, and about 15 to 20% of that was actually processed. So we're doing a lot, and part of the government's plan, that's the National Cocoa Plan, is about expanding our production capacity or output, and the federal government has already started that with a rollout of 1 million seedlings. Then they're moving further to see how we can increase processing capacity up to about 50% within the next 5 years. Also increase production capacity or output up to over 750,000 to 1 million in about 10 years. So it's a slow progression, but at the same time, we need, when we're talking about value addition and export of finished products, it's a different ballgame. The industry is worth what? $140 billion, that's the chocolate industry. But people have to understand that only just under $40 billion is actually the export value of chocolate around the world. The whole of Africa does not even import up to 1% of that. So the import value of chocolate into Africa is under $350 million. So it's not about us exporting raw materials and importing finished goods. It's completely different from that.
All right, sir. Thank you so much for all of that. So, Obadokun Thompson, the founder of International Cocoa Diplomacy, thank you for your time.
Thank you so much.
Let's take a short break. When we come back, we'll discuss insurance. Please stay with us. Welcome back to Watching Business Morning right here on Channels Television. Well, the conversation around healthcare, medical tourism, and what Nigeria is doing to curb that seems to be on the front burner these days. And we're taking that conversation, which we had on Friday. We're taking it further this morning with the Chief Executive Officer of AXA Mansard Health, Mr. Tope Adeni, right here in the studio. Mr. Adeni, good morning. Welcome to the program.
Good morning. I'm happy to be here.
Good. So your company, AXA Mansard Health, looks at bringing global healthcare or domesticating it, actually. Tell us about that intention.
All right. So at AXA, because of our very much global presence, as well as very strong in the market, as you may know that AXA Health, AXA Mansard Health, as we call it, is the leading health insurance organization in Nigeria. And the whole objective is to ensure Nigerian health center remains a global player. So it's not just only for domestic insurance, but also global insurance is domesticated in Nigeria. Not a case of we have to wire a premium abroad, or we have to be like an agent to a foreign company, but rather to improve the economy of the country, to ensure that Nigeria plays as a center of global player in health insurance and in healthcare delivery. And that's what we start seeing in the market, that we are moving from just sending people abroad, for healthcare that is complicated, into having complicated healthcare resolved here. And when people need to go any other place, of course, they have access to go. So Nigerian system is ripe now to be able to have even an expert coming to Nigeria to be able to do complex procedures. Healthcare access is becoming easier for the people because you have health insurance that is both domestic and global right here in Nigeria.
And,
that's what I
and the issue of cost is at the core of all of this.
Sure. So, again, when you have a local company that is doing global services, it helps you to reduce a lot of administrative costs, which is why strategically, when you have a company that is playing global healthcare in a local country, it reduces administrative costs, and so you are able to leverage on competitive costs, which is competitive across the world, and you are able to get double services within the cost that is contained already. So AXA does that also for you, and global players that are domesticated in their services, that have put a lot of their services in the local country domestically, they actually offer competitive costs so that people don't have to pay out of this world in order to be able to access high quality care.
And all of this, you're talking about health insurance.
Yes.
So there are packages that, individuals, family members, or corporates can buy into with AXA Mansard to give them these benefits you're talking about.
Absolutely. So you have different solutions, different packages according to people's needs. Some are corporate institutions, some are SMEs, some are individual, some are family. They always could have access to the global health insurance as well as local health insurance. So the whole idea is to ensure that there is healthcare access to everyone. Thanks to the NHIA, the National Health Insurance Authority, that is constantly driving universal healthcare, making sure that all residents, as well as foreigners that come into Nigeria, they can have access to decent healthcare. You don't need to be abroad when you come to Nigeria and you are getting stranded and you are thinking that any slightest, healthcare issue, you have to fly back out of the country. No, you have health insurance access that can take care of you, and you have healthcare hospitals, healthcare delivery channels that can also attend to your needs now. Because of this globalization in the local context, you are trying to make sure that global services are available from Nigeria. You also have healthcare institution, hospitals, diagnostic center of global standard, staying in Nigeria, coming to Nigeria, expanding in Nigeria, because Nigeria is a player, it has become a global player in the healthcare delivery services, from the demand side to the supply side. Demand side meaning the health insurance side, onto the healthcare delivery side. And that to see a couple of, institutions in Abuja, in Port Harcourt, in Kano, in Lagos, and all over Nigeria, springing up, improving access to quality healthcare, because the health insurance is not only domestic now, it's also global. And that's one of the things we promote to everyone, to say, look, you can actually have access to world-class healthcare right here from Nigeria.
But it seems you still have a lot of work to do, because for some individuals, if it's not abroad, it's not good enough. So, you still have to change those perceptions, even among Nigerians, both those abroad and those here at home.
Absolutely. So the first point of changing that perception is to do education, to let everybody see that actually you have a global access to healthcare from Nigeria. A company like AXA, because AXA, of course, AXA plays the topmost insurance company in the world that is present in 50 countries and with assets under management over 1.5 trillion US dollar. We have access to hospitals all over, thousands and hundreds of thousands of hospitals. But the beauty of it is the fact that this same AXA is AXA Nigeria. It's a Nigerian company listed on the stock exchange. Ability to offer global solutions from the Nigerian market, and you can have access to everywhere in the world. So again, we constantly educate institution, public, private, individual, family, SME to see the benefit of having global healthcare access right here from Nigeria, and it gives you access all over the world. We call it healthcare without boundary. Healthcare without boundary, right from here in Nigeria. And you can buy from Nigeria, you can buy even from diaspora, and you can see that the benefit outweighs, even the cost, because you have a lot of benefits, you have a lot of solutions that are competitive, and is working and is delivering very well.
But do you have packages for, those at the lower strata? I mean, you're targeting the very big guys who would have gone abroad. But then what about, the smaller people there? Do you have packages for them?
So for us, we actually, sequence healthcare for everybody. So you have access to everyday person in Nigeria, that you can actually have small money that you pay for domestic healthcare access. And sometimes when things go wrong, you also have opportunity that if you go abroad, that you can have access to it. So you have it sequenced from low to high. And because healthcare doesn't have to be overly expensive, when you are able to wisely plan for it, wisely design it in a way that it will cater for you, your family, or your institution. So everyone has access to healthcare when you buy proper insurance in order to be able to give you protection. So everybody has it: low, middle, high, upper net worth, or ultra net worth.
And this perception that if you're on insurance and then you go to a medical facility, one is not given priority, because sometimes it does seem like those facilities prefer, the out-of-pocket payments. Have you been able to, maybe weigh in areas like that?
Yes. So traditionally, people first thought that insurance will not serve them well, and so the out-of-pocket that they actually require. But things have changed gradually, because we are able to educate, not only educate, we deploy services and technology with the hospitals to be able to make the service very quick. So a few things that normally could confuse people is the fact that they do not know what they are covered for. So it's opaque to them. Sometimes also hospital, because a lot of time they are manual, they are not able to quickly see what is covered and the time to be able to treat on time. We have used technology to solve these problems. So we have been able to develop technology system integrated with the hospital, and they can actually see what is covered, and you can enjoy quicker services without paying out of pocket. It could be very painful to pay out of pocket. And what we design is not only for Nigerian market, it serves you anywhere in the world. Sometimes you have a need to go to the UK, or you go to Europe, or you go to the US, or you go to Canada.
Once you have your insurance,
once you have your insurance
you can
covered,
still use it abroad.
You can use it abroad as well. And that's why we talk about an healthcare insurance that serves you not only in the local market, but also serves you in the global market, that it can serve you in other countries when you need it. Nigeria is playing actively in making sure that people come to Nigeria now for healthcare access as well. It's not only that Nigerians must go to India or to Dubai, for certain
we have data to show that people are coming into the country.
Absolutely. People are coming to the country for complicated healthcare access and procedures that are being done. And they're coming across the various parts of the country, the north, the east, the west, Lagos. Every center of excellence is now present in those locations. And when you have a good healthcare insurance, it gives you access to this. Of course, sometimes, because nobody owns the healthcare, absolutely. There are specialties in different places. There are new discoveries that, in terms of health conditions, that may not be present in terms of how to cure it in one particular location. So you still need to have access to everywhere in the world. Just if it happens that you have certain conditions that we cannot get immediate care in a particular country, you have access to go to another country. So when we talk about global healthcare from Nigeria. We are saying that not only you can buy it only from Nigeria, you have access to it.
You can buy it in Nigeria, but you can use it around the world.
You can use it around the world. You can even be in the UK and buy it from Nigeria. You can be in the US and buy it and use it in the UK and use it when you travel to any other European country or African country. And that gives you comfort. For example, our diaspora begin to realize that they can actually buy a global healthcare here from Nigeria with AXA, for example, and you have access to everywhere in the world. And that is very important. It develops our own economy in Nigeria because the health insurance premium is here, domesticated in Nigeria. Of course, the consumption, the experience, the healthcare itself, you can access it outside the country, but majority of the time, a lot of people access locally and they get saved, and when they go abroad as well, they will get saved. And that is win-win. It's win to the customer, it's win to the citizen, it's win to the resident, and it's a win also to the economy.
And it's win to your company.
Of course, it's win to us.
So how do people access your product? How do they get in touch or something?
Oh, yes, very multiple access. AXAMansa.com is a very well-known website that people can access. And of course, our phone lines are all displayed there. And we have over 30 centers where people access all over Nigeria. You see AXA branches all over Nigeria that you can actually access. So both telephone, welcome centers, as well as website, it gives access. And when you download our AXA mobile app.
So you have an app?
Yeah, a very excellent app that you will love it. Just by seeing it, you just love it. If you download it, it gives you access. You make a lot of inquiries. You can have access to hospital locally. You can have access to hospital globally. And that, again, it gives a lot of information.
All right. Thank you so much for giving us the message from AXA Mansard Health. Mr. Tope Adeni, the Chief Executive Officer of AXA Mansard Health. Thank you.
Thank you.
Let's take a short break. When we come back, those potholes, you've been experiencing it. I have been experiencing it. Our cars are feeling the impact. We'll talk about that in a minute. Please stay with us. All right, now, at least, I think it's more than 70% of federal roads now are in urgent need of repair. And studies warn that the deterioration could cost the economy up to $5 billion a year by 2030. In 2026, government moved on two fronts, cancelling controversial road tax credit scheme that led firms like Dangote build roads against future tax liabilities, while simultaneously approving fresh capital, including a 2.07 trillion naira package for 10 states and a separate 3.94 trillion tranche for road and vessel infrastructure. The bottom line of all of this is, with the rains, we have seen some of the worst situations on the road. I don't know about you, but I have Mr. Femi Awofala here. He's the founder and Chief Executive Officer of the African Catalyst. And he says his job is to catalyze capital for roads. Mr. Awofala, I don't know what you're doing. The roads are really terrible these days. They are really bad. Yeah. At least in my area in Lagos, it's been terrible.
Yeah, I think it's really an issue of planning. And one of the key things has been the fact that it's good to build a road, but you need to have a long-time life cycle plan for every road. Every road takes on most amounts. You probably spend up to 2 to 3 billion per kilometer to build a decent road in Nigeria. When it comes to rains and you don't plan for the rain at the pre-construction stage, you're probably going to spend more time. And if you're going to spend more time, all your materials are washed away, all your aggregates are washed away. So the whole idea of road development in Nigeria and what we are seeing in this era of road failing is as a result of lack of long-term planning. The second part of it is the fact that most capital budgeting for roads in Nigeria or even highways are basically only focused on the capex, but there is no proper strategy for the long-term maintenance. And what has typically happen, and what we are seeing now is the fact that this year's rainfall has been the highest over the last 5 years. It's good for the farmers, it's good for agriculture, but in terms of road and drainage and things, it really opens up lack of design failure and a few other things. Most especially the fact that roads that have been invested upon. If you look at the road maintenance, road credit implementation, tax credit scheme, which started as a novel idea, but however, I think it didn't have the right level of supervision and structure to be able to value what was being driven. And also the issue of the Nigerian Revenue Service having issues with the fact that this income should first be appropriated. Government should decide what they want to do with their monies, but not necessarily exchanging it for work that has been done. So a lot is going on, and I think most importantly, what needs to happen now is the fact that we need to go back into engaging the private sector to see how PPPs can come and save Nigerian roads from a long-term maintenance perspective. The Nigerian government has set up what we call the Federal Road Maintenance Agency, FEMA, but they need more of strong institutional backing now to be able to take on the various work that has been done. Quite an amount of work has been spent on this government to really revamp the roads, to build new roads, but the question has always been, what is the long-term plan after these roads are being built?
I don't think that a lot of thought is normally given to the maintenance.
Correct.
You know, I mean, even apart from the public projects, even in the private, I don't think we really have that culture, which is why we see things do not last as long as they should.
Definitely.
So even for the roads, I mean, we were applauding Dangote when we had the tax credit scheme.
Correct.
Because we saw some of the roads that he did. Yes, and all of that. And then that was put off, you know, because, of course, governments, they have different motivation. The Revenue Service has one, the federal government has one, the ministry, the state government has one. So how do we find, and experts are involved when these MOUs are signed. So I wonder why experts do not bring the part that there's a need to have a maintenance strategy put inside the agreement so that in the next 10 years, we do know who is supposed to be maintaining this road, not just do it and then dump it. But where do we go from here now?
So basically, I think that that's already institutional backing for maintenance through the Federal Maintenance Agency. FEMA, correct. But the question now is, how does private sector come in? Now, a number of these roads currently have good traffic potentials. They can generate enough traffic. They can be tolled. And secondly, if they are tolled, then what does the maintenance contract will spell out? Okay, every month, check for potholes, make sure the drains are clear, make sure the traffic lights are working, make sure everything is working. So, and those opportunities themselves are actually what investors are looking for. It's clear that it's difficult for a typical Nigerian project developer to really fund a $200 million road, because most of the government incentives that should come into the greenfield development of those roads are not there. A classic example will always be things like having exchange rate available, you know, for repatriating your funds into the country. Other things would be, okay, I have done a traffic study. What if the traffic volumes are not what I projected? You know, will government support to help the debt service and things? Now, if it's difficult at that point in time, I believe that the private sector is ready to maintain. Because at that point, it's an easier entry into even getting the experience of managing a highway toll road in itself. And I think...
But are Nigerians ready for the tolls? Remember the Lekki toll and all of that?
Well, so if you look at the cost of bad roads, if you really think through it in terms of what you spend, 2 times the amount of money you spend in getting your goods from wherever you're coming from in the north down to the south, your car breaks down. And the fact about it is that the food inflation we are seeing in the country is not just about petrol. Let me correct that statement, because what it takes to get your goods from the farms into the cities, from the cities into the main supermarkets, it's a lot of cost that, you know, these producers or these manufacturers are layering and layering on it. To actually produce the goods is not that that of a big deal. Now, the question of affordability, once we have the level of communication that is required, I think things can go well. Now, communication also means stakeholder engagement. Definitely in every major road, there are people that are heavy users, like the big trucks and things. Those big trucks are happy to pay because they also know that, they don't want their trucks,
And they're causing a lot of damage to the road.
Damage on the road itself. So it's a give and back there, and it's a win-win thing. I think if we put all the right stakeholders on the table, it's possible to have a win-win solution for public-private partnership for road infrastructure.
All right,
Thank you.
Mr. Wofola, I think we'll have to bring you back because we are totally out of time. But I mean, the
so
potholes are really so annoying.
Exactly.
And you have to work on your shocks, and before you know it, you're hearing all kind of sounds again.
And the mechanics are happy.
They are happy. They feel good for them, unfortunately.
Thank you so much.
Well, let's go global now.
All right, let's check out what to expect this week. Investors will be watching out for a lot of things, but first in Canada, inflation takes center stage. This week, investors are waiting CPI data that's coming for the month of June. We'll see what played out right there in that month. Investors will be looking out for a 0.2% rise. That's for inflation. That's coming out for Monday. Then Tuesday, we have General Motors there. We're expecting Wall Street will turn attention to earnings coming from General Motors there. They're going to be looking out for their EV business, how that's looking so far. Then for Wednesday, the Max 7, some of the Max 7, they'll be releasing their earnings. That's Q2 earnings for on Wednesday. We have Alphabet, Google, and Tesla. Tesla will also be reeling out their earnings for Q2. Then on Thursday, attention shifts to Europe. We'll see what the European Central Bank, what they have, what they'll tell us about inflation, how it's played out so far, and interest rates going forward. Investors will be definitely looking out for that. Then German flash manufacturing PMI, that's in Germany. So investors will also be looking out for that there to see how the producers are doing right there in Germany. All right, let's flip over to Asia now. We see China. They've left their benchmark lending rate unchanged for the 14th straight month, signaling policymakers are prioritizing stability as the world's second largest economy navigates an uneven recovery. The decision suggests Beijing is holding back on fresh monetary stimulus. That's for now. Despite lingering weakness in domestic demand and the property sector right there in China. All right, also in Asia, see South Korea's stock market, that's under pressure today as the Kospi slipped in a catch-up trade, weighed down by a sharp sell-off in memory chip makers. Losses in heavyweights such as Samsung Electronics, SK Hynix reflected growing investor caution over the outlook for the AI-driven semiconductor rally, dragging the broader market down. So definitely when we check Asia market, we see that there's a pullback right there. Then we see global investors, they'll be turning their attention to the United Kingdom following the appointment of its new Prime Minister, with markets now looking for early signals of what the government is going to do next. And we see the pound already reacting to that, about 134, up by 0.16%. I was checking the British pound earlier this morning, about 9 a.m. Today. So it gained against the US dollar. Then what global investors will be watching this week with the new UK Prime Minister, the appointment of a new Chancellor, that's the Finance Minister. Investors will be looking out for that. Any emergency fiscal statement, they'll be listening for that. Cabinet appointment signals on taxes. Are they going to raise taxes or not? They'll be looking out for that. Spending commitments, relationship with the Bank of England. Are they going to pressure the Bank of England to either hike or reduce interest rates? Then initial reaction from the gilt markets and the sterling. We already did track the sterling. There was up this morning. Then business leaders, they'll respond to the new government's agenda. What's the agenda for this new government there? So Andy Burnham right there on the front burner in England. All right, to other parts now. We see Europe's largest low-cost airline, that's Ryanair, they're in focus after reporting a weaker-than-expected first-quarter profit. The carrier blamed softer ticket prices and higher fuel costs for the earnings miss, while warning that summer fares remain under pressure, highlighting challenges airlines face from elevated fuel prices and cautious consumer spending. I'll be back at 1:30 to give you updates on how the markets are faring. Back to Ini.
Thank you so much, Ladi. And just before we go, we are happy to say that there's been a recovery in the market, the NGX. And this morning, the market is almost up 1%, 0.93%. At 245,728.27. First whole call is still investors' delight from last week. This morning, it's up 9.95%. Sterling Bank positive. Access Holdings also positive, and I'm glad to announce Access Bank has recovered the 25 naira mark, and Zenith Bank is also positive. Boa Cement, that had a lot of drops last week, is back 9.98%. Ladi will give you latest numbers, intraday numbers at 1:30 during Business Incorporated. I'm Ini John McQuarrie, wishing you the very best of the rest of the day. Bye-bye.